A staggering $1 billion just flowed into Ethereum ETFs in a single day, signaling a monumental shift in institutional investment strategies. This event marks a pivotal moment in the cryptocurrency landscape, as Ethereum overtakes Bitcoin's dominance in the eyes of major investors. Looking ahead, analysts predict continued outperformance of altcoins as institutional interest shifts toward assets beyond Bitcoin. This trend is particularly evident with cryptocurrencies like Solana and XRP, which have gained traction due to their robust technology and growing user bases. Analysts suggest these altcoins may reach new all-time highs in the coming weeks. Ethereum, meanwhile, is poised to break previous resistance levels, creating a blue sky scenario for its price trajectory. This potential surge is fueled by the ongoing development of decentralized finance, DeFi applications, which have garnered significant attention from both retail and institutional investors eager to tap into this innovative sector. The DeFi boom has not only expanded the utility of cryptocurrencies, but has also attracted substantial capital inflows. However, with this rapid growth comes an increased likelihood of regulatory scrutiny, particularly regarding DeFi protocols and stablecoins. Governments and financial authorities worldwide are intensifying their focus on compliance frameworks, which could reshape the landscape of digital currencies. Investors must remain vigilant about these developments, as they may impact market dynamics significantly. As Bitcoin solidifies its role as a store of value, its volatility may decrease compared to the explosive growth seen in Ethereum and its ecosystem. This evolving landscape may prompt investors to rebalance their portfolios, seeking to capture opportunities in the altcoin market. The shift in momentum towards Ethereum and other altcoins could foster a more diversified cryptocurrency environment, encouraging broader participation from institutional players. The implications of this new focus on Ethereum are profound, potentially reshaping not only the dynamics of the cryptocurrency market, but also influencing traditional financial systems. As institutional capital flows into these emerging assets, the next few months will be crucial in determining how this shift will redefine investment strategies and the regulatory framework surrounding digital currencies, setting the stage for significant transformations. The shift towards Ethereum has been building momentum over recent months, reflecting a significant transformation in the cryptocurrency landscape. The total cryptocurrency market cap recently reached an impressive $4.13 trillion, bolstered by a 2.8% daily increase and substantial 11.1% gains over the past week. This surge created an environment ripe for risk-on assets like Ethereum, which has increasingly captured investor interest. The Fear and Greed Index, rising to 63, indicates a resurgence of investor confidence after a prolonged period of caution, suggesting a shift in market sentiment. Historically, institutions have been hesitant to diversify their portfolios beyond Bitcoin, the pioneering cryptocurrency. However, recent regulatory clarity regarding digital assets and the maturation of the Ethereum ecosystem have contributed to a more favorable outlook. The rise of non-fungible tokens, NFTs, and decentralized finance, DeFi, projects has showcased Ethereum's versatility, attracting a diverse range of investors despite recent market cap fluctuations. Macroeconomic factors have also played a crucial role in this evolving landscape. Easing geopolitical tensions, particularly with Iran, have created a more stable environment for risk assets, allowing institutional investors to pivot towards Ethereum and its associated protocols. As these investors recognize Ethereum's potential for innovation and growth, the demand for this cryptocurrency is likely to increase further. Looking ahead, as regulatory frameworks continue to solidify and the Ethereum ecosystem expands with new applications, the potential for sustained growth appears promising. Analysts predict that Ethereum could solidify its position as a leading asset in the cryptocurrency market, potentially outpacing Bitcoin in the coming months. This trend could fundamentally reshape investment strategies, underscoring Ethereum's role as a transformative force in the future of digital finance, particularly in the evolving landscape of blockchain technology and decentralized applications. The recent $1 billion inflow into Ethereum exchange-traded funds, ETFs, marks a pivotal moment for cryptocurrency investors, signaling a profound shift in institutional investment strategies. This substantial influx not only highlights Ethereum's growing prominence, but also indicates that Wall Street is increasingly recognizing it as a more viable asset class compared to Bitcoin. Historically, Bitcoin has dominated the cryptocurrency landscape, often regarded as the gold standard of digital assets. However, this new trend suggests that institutional investors are now diversifying their portfolios, looking beyond Bitcoin to explore the potential of Ethereum and other altcoins. Ethereum's robust smart contract functionality and its role in powering decentralized applications have made it an attractive option for institutions seeking innovation in their investment strategies. The influx of capital into Ethereum ETFs can be interpreted as a vote of confidence, not just in Ethereum itself, but also in the broader cryptocurrency ecosystem. For investors in altcoins like Solana and XRP, this development serves as a rocket fuel signal. It indicates that major financial players may soon allocate significant resources to these top-tier altcoins, potentially enhancing their market positions and driving their prices upward. Conversely, Bitcoin holders may experience a period of stagnation as capital flows toward Ethereum and its associated projects. This shift could lead to a reallocation of resources within the crypto market, impacting liquidity and price dynamics across various assets. The implications of this transition extend beyond immediate price fluctuations. They represent a potential redefinition of how institutional investors engage with the cryptocurrency space. As institutions increasingly embrace Ethereum, the entire crypto economy may undergo a transformation, prompting individual investors to reassess their strategies and positions. Looking ahead, the growing acceptance of Ethereum by institutional investors could catalyze further innovation and development within the blockchain space. As more capital enters the market, we may witness an acceleration in the adoption of decentralized finance, DeFi, and other blockchain technologies. This evolving landscape may ultimately lead to the emergence of new investment opportunities, making it essential for investors to stay informed and agile in their decision-making. The cryptocurrency market is poised for a new chapter, and those who adapt quickly may reap significant rewards. On June 15, 2026, Ethereum ETFs experienced a historic influx of capital, receiving over $1 billion in investments in just one day. This remarkable event set a new record for the largest single-day investment into Ethereum ETFs, illustrating a significant shift in market dynamics. The surge in capital led to a notable outperformance of major altcoins, with Solana rising by 9% and Dogecoin jumping 8%. Meanwhile, Bitcoin saw comparatively muted movements, briefly touching $122,800. This shift in investment patterns marks a clear departure from the previous Bitcoin-centric focus of institutional investors, who have traditionally viewed Bitcoin as the premier digital asset. The substantial influx into Ethereum ETFs highlights a growing belief among institutions that Ethereum presents a superior opportunity for exposure to the burgeoning crypto economy. This belief is fueled by Ethereum's utility in decentralized finance, DeFi, smart contracts, and tokenization, areas that are rapidly gaining traction in various sectors. Institutional investors are increasingly recognizing that Ethereum's versatility allows for greater innovation and potential returns compared to Bitcoin, which is primarily seen as a store of value. The scale of this investment is unprecedented and signals a potential turning point in the cryptocurrency market. Analysts suggest that this could lead to an expanded focus on altcoins and a diversification of investment strategies among institutions. The implications of this shift are profound, as it could encourage more projects to develop on the Ethereum blockchain, further solidifying its position as a leader in the crypto space. As institutions pivot towards Ethereum, we may witness a broader acceptance of altcoins as viable investment vehicles. This transition could ultimately reshape the landscape of digital assets, fostering a more competitive environment among cryptocurrencies. Furthermore, increased interest in Ethereum could drive up demand for its native token Ether, potentially leading to higher valuations. Looking ahead, this landmark investment could pave the way for additional institutional interest in Ethereum and other altcoins, signaling a transformative era in the cryptocurrency market. The future may not just belong to Bitcoin anymore. Rather, we could soon see Ethereum and its competitors emerge as pivotal players in the global financial system, fostering innovation and driving adoption in the years to come. As we witness this shift towards Ethereum and the altcoin market, how will this new dynamic impact the future of cryptocurrency? Share your thoughts in the comments below, and don't forget to subscribe for more daily deep dives.